The objective of this course is to equip yourself with the knowledge of various types of momentum trading strategies, and how to manage the risks associated with it. After completing this course, you will be able to list and explain the fundamental reasons behind the significant and persistent returns from momentum trading strategies. Create and backtest time series and cross-sectional momentum strategies on stock and stock indices, fixed income, commodities, and futures markets. Optimize look-back and holding period. Analyze portfolio returns and risk, using different performance measures. Identify the nature of time series, using Hurst exponent. Explain the basic concepts in futures markets, such as contango, backwardation, term structure, and roll returns. Apply crossover and breakout models to volatility decile portfolio. You will start this course with the definition of a momentum strategy, and dispel the myths around it. Then we move to the fundamental reasons behind momentum, which has been prevalent since the last 2 centuries. You will also get acquainted with the basics of Python, which can be skipped if you are already skilled in it. Next, you will explore the field of technical analysis, and devise a technical indicator-based momentum trading strategy. You will implement this strategy on a custom volatility decile-based portfolio. Next, you will understand the types of momentum strategies, namely time series and cross-sectional. You will explore the difference in their approaches with the help of examples. You will then explain the importance of the look-back and holding period in a momentum strategy. Further, you will implement Hurst exponent on various asset classes to identify trends in the data. You will also conduct a correlation analysis to identify optimal look-back and holding periods. In the next section, you will be able to explain and implement a cross-sectional momentum strategy. You will learn the different ranking factors, such as past returns, and fundamental factors, used to rank the assets in a portfolio. In the following section, you will identify different type of events which give rise to momentum. You will identify a pattern and implement a momentum trading strategy on the treasury markets. Further, you will learn the basics of futures markets, and implement a strategy to extract roll returns and cross-sectional momentum strategy. In the next section, you will explain the causes and effects of momentum crash and how to avoid them. One of the crucial aspects of backtesting trading strategies is risk management. You will learn various facets of risk management in day trading. You will learn these strategies through examples, fundamental reasons, and performance statistics. Also, you will gain knowledge to enhance the trading signals of these strategies. Finally, the trading strategies created in the course can be extended further, and used for paper and live trading. You will learn to automate these trading strategies on interactive brokers. At the end of the course, you can access the Jupyter notebooks created in different sections, along with the data files from a single downloadable folder. Let's get started.